Look who's back. The man with the yellow sheet. Yes, Atul Suri is back after
They can't
his
see
long
it.
sabbatical.
You should hold up that sheet.
Okay, so
on
what do we
camera.
start with?
No, I think in a day when
Let's
everyone
start
is
about your.
the day, I mean when everyone is pretty
I haven't
gloomy
framed
with the
the question, you know, what I would ask.
I'm not even ask. I think in a day when last few days have been a bit gloomy for the markets and people have been asking the question, there have been concerns, etc.
300 points and.
Yeah, it's 3 to 4%, and people are also nervous. When we look at the 2003 to 2008 bull market, we say it was one big bull market, but we forget there were 3 downside circuits, and yet we call it one big bull market. So I think it's important to keep your face towards the sun and look at markets beyond. We may correct further. Yes, we are in an intermediate correction. We are feeling it in our portfolios and stocks. But it's important to see what the bigger trend is, what a multi-year trend is. And if you look at markets, you will notice that we have been having a big global bull market. We sort of. So what I'm going to first show you is the FTSE All World Index. It's a very interesting. It's one of the most broad-based indexes in the world. It has about 49 countries, developed, developing, emerging, everything. India is a part of it. Over 3,000 stocks. And you notice that this, after the 2008 top, this market corrected, like all global markets have, and it has just broken out into new highs. So what you really have is a massive triangular consolidation pattern, and the up move, the projection is about 40% from here in the next 4 years. So you're talking of a global equity bull market with a 8 to 10% kind of compounding for the next 4 years. Also, I think this is very important because we are in a globalized environment. There are global flows, and one really cannot forget that. So I do make a case for being a part of a big global equity bull market, and that's very visible. I mean, if you look at it, we had issues of Brexit. What happened? The market went higher. What happened after Trump? The US has had its beauty. I mean, we've had issues with Korea. I mean, Japan is up, US is up, Korea is up. So bull markets are built on walls of worries, and that's one of the most heartening factors. So essentially, in spite of bad news, if the markets are going higher, it is telling you that things are positive. We are in a bull market.
Before we look at your second graph, which is the S&P 500 graph, the continuation of this famous line is that bull markets, they climb the wall of worry, but they always come down on ray of hope. There is a lot of hope in this market, isn't it? I think there is a lot of participation in this market.
Maybe in the Indian context, but at the moment, we'll get to that. But I think in the whole global context, I find there's a lot of concern. Okay. People are so bothered about, everything and anything. But the price action beyond that is telling you something else. The market is telling you something else. The screen is telling you something else. And this is happening globally. I mean, even if you look at emerging markets, we'll get to that later. Yeah. But what I'm trying to tell you is that we are a part of a global equity bull market. So far, it's essentially been driven by the US. If you look at the S&P 500 chart, you will find after the 2008 top, we kind of made a double bottom formation, and we are at around 2,500. The kind of move that we've had has been phenomenal.
I was just going to come to that. The fact that in your all-world index, S&P 500 has been the leader. India has done well, but that's within the emerging market pack. What happens if we see India-like days within the US markets, which we have had a flavor of once you hear, escalated tensions between North Korea and the Trump administration? Is there a chance that we will see those kind of dip downs and very sharp ones within the S&P 500 index as well? Because that's bound to have correlation to India as well.
I think it has to happen. We are having a dream. We are having a slumber bull market. I mean, this is like, your people are in a dream mode, sleep mode. It's great. It's great for everybody. But we know, I mean, being in the markets, it cannot last forever. But Aisha, even if there are corrections, that do not mean that it is not a bull market. You will have 3%, 5%. You can have a 10% correction also. So the fact is that we are a part, if you look at the bigger picture, and we have been very fortunate that we are in this slumber mode, but volatility has to kick in. If winter is here, spring is not far behind. And if spring is here, then winter is not far behind. So I guess we have to be prepared for it. My only thesis is that the US has been the major driver. It has 50% weightage in this FTSE World Index. But going ahead, I feel that the US has run and kind of met its targets. Generally, when markets meet their targets, they tend to go into sideways or, they don't have, I don't think going ahead, US is going to be the single major driver of global markets. So it's important for us to look and find out which is that space which is going to drive this whole thesis of global bull markets. And that is where the opportunity is for us as investors. So that's really my way of, sort of trickle down approach.
And where do you sense that opportunity lies?
So I want to cover two other asset classes or equity point of view. Second is Europe, the second highest weightage. So if it
second highest weightage in the
FTSE All World Index. So
what is India's weightage?
India is about 1.12 or so.
Doesn't matter. Why do we need to track it?
Yeah. So let's go to emerging markets. No, let's talk about Europe. Okay. Let's talk about Europe. So if you look at the European markets, you will realize that Europe, in spite of what's happening to DAX, which is the big brother in the whole Europe index, you will find that the European index really still does not inspire that kind of confidence. The breakouts are really far away. So for the moment, you do not see that leadership or that next thrust coming from Europe. So you move to the next subset, which is the emerging market space. And this is, I think, where the interesting chart is. India is a subset of that. That's why it makes it even more interesting for me. If you look at the MSCI Emerging Market Index, you see the kind of breakout. It's had this kind of it's been a laggard since 2008. And thanks to countries like China, Brazil, Russia, India has the standout chart in the emerging market space. Yeah. If you look at the Indian chart, it reflects more like the S&P 500 and less like what other countries in this index are. So the MSCI Emerging Market Index has just broken out. It's broken out with a 10% move. But what's more important is what's my projection. I feel in the next 4 years, we can have a 70% up move in the MSCI Emerging Markets. That's almost a 14.
Sure? Grab some water and think again.
No.
17,000 is not like going to happen in a jiffy.
It won't. There will be corrections.
Okay,
and we are going through one. We will go through pain. And at the end of it, not all are going to come out winners. But the fact is that you have to understand what is the bigger trend and play it. You cannot be in, out every day for an investor. He has to understand the larger trend and play with it. So we are looking at almost like a sort of 70% upside in the next 4 years, which is actually about, it's nothing like massive. But the fact is that it is a compounding story going ahead.
And that's for emerging markets, not for India. What is your projection for India?
That's
project 17,000 in 4 years.
I would think an Indian Nifty index works out, again on my chart projections, works to around 17,000 for the Nifty in the next 4 years.
Okay, have you compared the Nifty's chart over the last 10 years with the Dow Jones chart in the 1990s? Do you see a similar sort of a pattern there? Because that was the mother of all bull markets, right? Went on for, I think, 12 years.
I think that's a very interesting correlation. And that correlation actually works for me if we go ahead. What is it that's going to drive this Indian bull market? What changed in that stage was the domestic equity participation in the US. If my numbers are right and whatever I'd read, it moved from something like 13-14% to almost 50%. And this shift in domestic savings towards equity is what created this so-called mother of all equity bull markets. And that is the most heartening fact. When I go and meet clients, when I go and meet investors, you'll be surprised that a 5%, 10%, it may phase us in the market because people are leveraged. But for someone who's unleveraged, who's an investor, who's sitting on cash, they are generally going out. The SIPs are not stopping. Yeah. And we saw this in the whole demonetization phase. The domestic flows, the domestic SIP flows didn't stop. So I think this whole cult of SIP investment and this, 4,000-5,000 crores that is coming here is going to actually be the big driver. And this number, I think, will go up. Simply because for an Indian financial investor, you will find that the alternatives are very limited. A 5-6% FD and this whole transition that's happening from black to white, I think is going to be a very big trigger. As I said, yes, we are going through a correction. We may have another 5%. The Nifty may be at...
is this so right now what we are seeing, are we stepping into that intermediate correction?
I think we already are.
Okay.
We already are in this correction.
Because today's a stable market.
I'm telling you, we can come down to 9,700. I will be, if we...
In this sell-off.
What is 9,700? Nothing.
No, of course it's 4%. Nothing, but I'm just saying from a viewer standpoint, if they're asking what is the bottom to this selling that we see
one doesn't know. If 9,700 cracks, that's when I think the concerns will come. And especially the pain will be felt in the mid cap and small cap because a lot of guys have got into this fancy for 2-digit stocks. That's where the pain is going to have. I mean, we can even have a 10% correction, which would be 9,200.
That's our favorite topic, by the way.
I know.
Okay, so my next follow-up question would be, you mentioned something very interesting, that all bull markets are correct. We've seen 3 circuit downs or 2 circuit downs. I think there were 3 or 2? 3. Okay, 3 circuit downs in the last bull market. You may see casualties in this bull market as well.
Sure.
What will convince you that the bull market is getting over? I mean, charts could change. This is a view which is based on today's trend.
Absolutely.
What would be that trend change moment which would tell you that, look, you know, I want to revisit my call on Nifty now again, and I'm not confident about the bull market?
I think the 9,000 to 9,200 band. I mentioned 9.2 from a 10%, and also I think in the intermediate term we have a potential double top. So that's getting into more micro stuff. But I think if the Nifty goes below 9,000, I would be really concerned.
All bets are off then.
I would reconsider
but
my
9,000
thesis.
is 10%.
That's fine.
So in 10%, I mean, bull markets technically can correct 33%.
They can correct even 50%.
But at 9,000, you would say bull market is over.
I would think the patterns that this particular bull market has played out, the kind of moves that I'm seeing, I feel that below 9, I would, as I said, I'm not making a case of a destruction of the bull market, but yes, I would be absolutely surprised. I would give it a very single-digit probability at the moment.
Okay, so let's talk about the good stuff. Let's talk about not 9,000, but 17,000 in the next 4 years.
Okay.
What's going to lead it?
It's difficult to pick a single sector and run the brush through and through. What I find is that every correction throws up new sectors. Like you'll see earlier, say 2 years ago, it was pharma. Pharma just led this rally, and it looked like a sector that's going to propel our markets, Indian markets higher. But what happened was that the trend really changed. What emerged were financials. So what happens is that in a larger bull market, you have these intermediate trends. Every intermediate trend throws up a new sector. And some other sector that is excessive, overbought, or things have got wrong, have corrected. And as I said, you cannot have a better example than what has happened with pharma. And again, you'll find pharma now basing and emerging. Financials have been the drivers in the last 1 to 2 years. Consumptions were before that. So what happens is there are trends within the larger trend. So it's important for a person to ride these trends, identify, ride them and get off, and then get on. But as I said, they are not short-term trends, they are larger-term trends, and one will have to have a longer mindset and every up and down, and that really affects people who are leveraged. So when you have leverage, that's when the futures and whatever margin funding, that is when you get affected. But if you are a cash investor, which a lot of people are today, I'm really surprised with the kind of flows that are coming. I don't think these are going to set them off massively. In fact, they may look at it as opportunities.
What's your view on the Bank Nifty?
I think it will pretty much reflect the whole thing. Bank Nifty, interestingly, is almost like a private bank Nifty. That is what is really driving it. It's the HDFCs and ICICIs which are driving it. So these are also charts, which are wonderful. I mean, you look at HDFC, look at Kotak, look at IndusInd. These are all dream charts,
What could be the Bank Nifty? Because if you're making a case for Nifty to go to 17,000, the heart of the market is the Bank Nifty.
Absolutely.
That is the bull mother. That is the bull run, sector of plan, so to speak.
Right. So I have done projections on that. It works around 82%.
82%. So can I say that start a sip in the Bank Nifty?
Makes a lot of sense.
Just for next 3-4 years, don't look at market volatility.
I think so.
My last follow-up question, at least from my side, would be every bull market has a personality.
Sure.
The personality of this bull market is that there is no volatility.
Sure.
If volatility comes back, what happens then? It has to come back.
It cannot
remain at 9-10%.
If spring is here, winter is not far behind.
And
it's seasonality.
It's raining in Mumbai still.
Yeah, whatever. Winter now, hopefully. So essentially, you will have your level of seasonality, and that is a reality. That is a reality, and this is really what will sort of upset or wobble things around. I think that kind of volatility is going to come. In fact, the next phase of that would be this kind of volatility that there is.
So how do you protect your downside? If, God forbid, we were to get back to 9,200 or 9,000, where do you need to get out of in the market right now?
I think there are two things. One is leverage. You have to make sure that your leverage is low. I'm not saying we'll get to 9,200. I'm just giving you probabilities that what all is possible. But I think 97 should be the first support. If 97 crosses, then we could head all the way to 90 to 200. Yet that wouldn't break my thesis of a long-term bull market. The first thing that you have to knock off is leverage, because a lot of people get into leverage. And second is crappy stocks. Every time we see this, every time, year after year, for all my life, I've been in the markets, 25 years, I've seen that the ending, you'll always find these 2-digit stocks hitting 3, 4, 5 circuits. I don't want to take names, everyone knows. I don't want to.
Go for it. We're not going to stop.
But there's the same names, the same things.
The JPs, the GVKs of the world.
Whatever. I mean, Himachal Futuristics of the world. You have multiple circuits, and then they go and everyone calls up just to find about that stocks. I think that's a very telltale sign, and that happens every trend.
Which is happening right now.
Yeah,
so just avoid that space?
that's always a place you get sucked into, you know.
I got to ask you two stocks, and these are like stocks where we know the bull run is intact. One is Bajaj Finance. It's been like one of those darlings of the stock. And the second one would be Avenue Supermart. Limited history, but I'm sure by now you must have picked up the charts.
Right.
Would you say that these are two stocks you would buy and they are the best two stocks to participate in this bull market?
See, I can make decisions based on data right now. The answer is absolutely yes.
You will keep Bajaj Finance based on today's decision?
I have it as a vested interest.
And
I have it in my
Avenue
portfolio.
Supermart?
Again, a vested interest. That, you know, at the end of the day,
I don't know your portfolio, just a coincidence.
I'm just letting you know. So I just want to keep a disclaimer. But at the end of the day, you know, till we do not make a lower bottom, I don't think there is an issue. People have a lot of fears. This stock has already moved. It is this. But in trending markets, in trends, in fact, the leaders are always of this attitude and this nature. So I really don't have any fears about getting into stocks like this. That's why I stay away from. Give me a stock that hasn't moved. Give me a 2-digit stock. Give me a 1-digit stock. I think that is where the Waterloo is for this market.
All right, Atul, we leave it at that. Thanks very much. We are rushing against time, but great to have you in our studios.
Wonderful to be here. Thanks.